Let's move on to looking at markets more specifically.
Yes, I see this, and we've just discussed the travails of making money for the global macro community. And what I want to say again is contentious. I want to say this is almost unparalleled in being the most exciting moment for global macro today. And I predicate that upon making an analogy with the central bank coordinated policy intervention in the foreign exchange markets after the Plaza Accord in, I believe, 1985. There was a profound unease at the current account, and particularly the trade deficit that America was running up, especially against the Japanese, which was deemed to be contentious. And the central bankers agreed that it would take too long for the real economy. The real economy is composed of slow-moving prices. Wages are slow, and the notion of having to wait for productivity improvements and wage price negotiations to work their course via the US landscape, corporate landscape in Japan, such that those balance or deficits would be resolved successfully and become less politically contentious, it was just too long. Politicians just don't have that time. And so they jumped into the world of macro. Macro is all about fast moving prices. Foreign exchange is fast. Stock market prices are fast. The S&P, all stock markets last year were up 30% in dollar terms. Fast. And so the notion was the yen and the Deutschmark would appreciate. Now, hedge funds, that was an amazing, this is the period of the alchemy of finance. George Soros celebrated and very successful financial adventures. And they just ran the biggest long positions. Now, no one stopped to say, well, the Deutschmark's getting expensive. It didn't really enter into the vernacular of trading in that market. It was macro. There was a policy impulse of sponsorship by the world's monetary authorities, and you were trending, you had to have that position. And by and large, it succeeded. And so what I would say to you today, that today the policy response can't be found in foreign exchange markets. It's being muted somewhat by the beggar thy neighbour, that everyone can pursue the same policy. So currencies, up until very lately, haven't really moved that much. And instead, the drama is unfolding in the stock market. I would say to you that policymakers are so absolutely beside themselves with regard to how structural these deflationary forces are, and that they recognise that they really have very little to offer once policy rates are at zero, the zero lower band, that they have to stave this crisis off. You cannot have deflation today. And I believe they are now responding to the fast-moving circuit of the stock market. And clearly America has demonstrated something. That policy response underwrote a very virtuous cycle of higher asset prices, which, if you will, rekindled a degree of animal spirits. There's greater credit demand within America. Now, allied to the shale oil gas revolution and the weakness of the dollar over the period. But the US today is deemed to be the most robust economy with the greatest probability of escaping the stall speed.
And telling us that QE worked.
It's all about which degree does it work, which planet, or which, and certainly at that level it worked. Now, if you wish to take the other side and say, QE doesn't work, okay, it worked by redistributing. It doesn't create wealth, clearly. What it aims to do is redistribute economic growth from one part of the global system to another. So as the US has come to the forefront in the last 5 years, China's found its growth rate has, from this perpetual notion of 10% GDP expansion, it's now 7, and everyone's scratching their head and has great doubts that 7 can be maintained.
You don't really believe it's 7?
It's fugazi, whatever. It is what the market is willing to entertain, and presently that's somewhere around the 7% level. So QE, if you will, has succeeded in that redistribution away from the Chinese mercantilist axis back into the American axis. So I believe that clearly in Japan, I think when they look back now, they see that's the trick we missed. We missed the fast-moving reaction of equity prices. Sponsoring higher equity prices would be a means for companies issuing equity, reinvesting in their businesses, employing people, raising prices, and getting this thing moving again. again.
So you feel the Japanese coming around to the American style of QE, but wanting even to do that in double time?
Yeah, absolutely. To catch up for 25 years.
They're doing sudden, huge
behind.
catch-up.
Huge catch-up. And now the problem, the perception that I have of a problem is that that's when the moral curmudgeons step in and say, this is all crazy, I disagree with this, I'm not playing.
So they make their disapproval a reason not to play the game.
It won't work, and so they don't participate. Equities are overvalued, and I'm going to tough it out. I'm just not going to be in that market. As I say, there was a time in my life when the sun only rose to humiliate me, where perhaps I shared that. And it's bunk, it's nonsense. It may not work, but presently the perception is that it will work, and those asset prices are trending, and you should participate. And then within Europe, such is the political time frame, and the stakes are so enormous that it has to work now. Yeah, we have the French elections, national elections, are in 2017, and we have been caught with, because they raise rates. As I say, when I was last in rates, they raised rates, and they've been slow to this game of quantitative easing, and as a result, they are clearly behind the curve. And so economies from France to Italy and others have been unsuccessful in bringing these deficits below 3, which of course then imposes further austerity measures, which are just toxic in the political social space, and we're seeing radicalization of policy. It may be contentious to say, but if the French election was held today, I would worry that the Marine Le Pen party would win. Now that's not to say necessarily to cast aspersions on that side. It's just to say that I think the thrust of her policy would be to take France out of the euro. So my point is that so we've had this year of a further year of deleveraging the European banking system, deleveraging the commercial space, and these very slow moving prices. Wages are still not moving, prices are still not moving. If anything, they're moving the wrong way. And Europe needs high equity prices and high animal spirits, and then you get people feeling more confident about the collateral, the banks feeling more confident about the collateral that underwrites their lending, they'll be more willing to lend, and slowly but surely we will re-engage and we will get growth perhaps on a par with what you're seeing in America today.
So you're pretty certain this is going to happen in Europe, in that it can't not?
One can't be certain about anything, but I'm certain that it's a policy underwritten by the central banks, and as a macro manager, I want to put myself alongside their impulse and their desired intentions. Whether with Europe just now, Europe is the most contentious because politics enters the arena. Will the Germans allow it? I may apologise for my caricature of a wonderful nation. My only point there, I have 2 points there. First of all, Angela Merkel, back in the day, had the chance to appoint Axel Weber as chair of the ECB. So, good German, the German orthodoxy would prevail. And there's one thing that characterises Merkel, and she is a pragmatist. And she doesn't have that same ideology that we see from other parts of the German church. And she passed him over in favour of Draghi. I think that's huge. I think she recognised that if Weber had been in charge, not to do him an injustice, but that German orthodoxy, the euro would not have survived.
She would have taken away the options.
Yeah. So she's already, if you will, on the political side, I think, shown a willingness to endorse. And what the ECB's gone on to do is remarkable, in terms of what we thought it would be capable of doing. But of course, we keep hearing the Schäubles of this world, the German finance minister, ranting that either the injustice or the fact that QE doesn't work. And again, maybe he's right, maybe he's not, but I think we have to try anyway. Now, the point is, Merkel is more popular than her party. And I think she's more popular because she has that pragmatic European view rather than the ideology that we hear and of course is disseminated through the financial press. So I think the Germans perhaps are less dogmatic than we believe but I don't know. I don't know.
Go back briefly to the moral imperative. You know, the people who are very angry about QE, say in Japan, etc., who disapprove of it, they would say the moral imperative is not to do QE, but you've just suggested that for you, the moral imperative in Europe is to do proper QE.
Well, desperate times breed desperate measures. The policy errors, I believe, the fatal policy errors are all in the past. Economies across the world were allowed to take on so much debt that they have, and taking on debt, you're borrowing from the future, you're borrowing consumption to spend it today. So we overinflated GDP growth rate. Right? And there's no surprise to me today when people are disappointed by today's growth rate, because it's like, I ate your sandwich yesterday, you know, it's not there. So I don't see a clean solution. I see this as a grubby solution, but it's closer to being a solution than anything else that I can conceive of. And with QE, again I say, I think we barely scratched the surface in terms of what will happen. I think it will spread into central banks essentially having to endorse higher government budget deficits to sponsor public work projects, or to favourably to sponsor tax cuts. I think that is in the future, because we have not resolved that deficiency of demand, which of course is a function of having over borrowed from the future to spend yesterday.
Yeah. Okay, so more complicated, if it can get more complicated. How does it end? And we can talk about the money printing going on forever. We can talk about the different ways that can be used by central banks to try and stimulate demand, etc. But one day, it has to come to an end.
Indeed. So,
what makes that happen?
So, if I may segue into that answer by challenging the notion, the popular notion, that quantitative easing has distorted and manipulated public markets. Again, I think I used the term earlier. Bunkum. Absolute nonsense. Absolute nonsense. JGBs, if we take an example, are fairly valued. You know, the economy just fell 7% in the last quarter on an annualized basis. There is no inflation. They've had 25 years of no real GDP growth. Where would you expect JGB bond yields to be for a fiat currency that can issue its own paper currency? US Treasury bonds, where should they be? I struggle to see again, I think Dylan Grice was the great architect of the notion that you can define the upper bound to today's interest rates by trying to determine society's capability to meet those interest rates at higher and higher levels. And what you find is we cannot live with a Paul Volcker and putting interest rates at 15%. It doesn't work. There's so much debt that if you reprice debt, the economy slows down. And we saw that, I think, 2012, you had after the taper tantrum, and 10-year bond yields went over 3%. What happened next? The economy slowed down. So I don't think JGBs are the wrong value. I don't think US Treasuries are the wrong value.
Equities?
I would say to you, if anything, I would be a buyer of US Treasuries, and I'll come back to that. US equities, some of the best companies in the world who have exceeded all expectations, both in regard to growth and returns on capital. And we've just had another quarter of earnings, and they continue to do it. Valuations, again, fugazi. When it comes to valuation, one man's high valuation is another lady's low valuation, or what have you.
You've just lost interest in valuations, haven't you?
You can't. It's a bit like the Supreme Justice. What was he called? Potter. In 1964, there was a successful prosecution of a cinema owner in Ohio for showing a French movie. It's always a French movie. And he was charged for the notion that there was pornography, and so he was charged under the Obscenity Act, and it was overturned. And Justice Potter went on to explain that the Constitution allowed for obscenity, except for hardcore pornography, and he didn't feel capable of defining hardcore pornography, but he felt sure that he'd be able to recognise it should he see it. And that's my take on valuation. I'm pretty sure I'll recognise it when I see it, but today,
Okay, take me back to US Treasuries. You said you'd be a buyer of US Treasuries today. That's a pretty contrarian view.
Well, we are long 30-year Treasury bond yields. This year we have, I think, been among a select group of macro investors who've actually made money being long US Treasuries. It's been a very popular trade, being short. It's particularly relevant today with the notion that following the Jackson Hole central bank soiree, if you will, in late August, that there seems to have come out of it some notion or tolerance that the dollar would rise. Now, typically that's the fiefdom of the Treasury and not the central bank, but we'll let that pass. The dollar has been on a tear ever since that meeting. And my take on that is that I think America looks at it, increasingly feels confident, rightly or wrongly. I'd err on the caution, but feels confident that it is largely resolving the issues stemming back to 2008. But when it looks to the global theatre, it's desperately concerned about China, and desperately concerned about Europe. And so the last 5 years were, if you will, it redistributed global growth. And by redistribution, bear in mind, I'm saying that quantitative easing, as pursued by the Federal Reserve, had the explicit policy aim of ensuring that the dollar would not rise. The dollar always rises when there's a deflationary crisis in the marketplace. The dollar index was trading at 80 pre the events of late 2008. It briefly flared, and then you had quantitative easing, and it sat at 80 for 5 years. And what it's been doing is America's been determined that dollars earned in America create jobs and prosperity in America. Whereas in the last 10, 15 years, the mercantilist axis of Europe and of course China has meant that those dollars were exported via the trade deficit to elsewhere. That just couldn't be allowed to happen. That hasn't happened, which is to say that again, boosted by shale oil, of course, the trade deficit has been falling.
So the growth has remained in America.
Has remained in America. And I think now, given the kind of perilous poker game that we have ongoing, I think America now is willing to be less curmudgeonly, more generous with that smaller pot. It may not be a great expanding pot, but it's kind of Buggins' turn. It's time for the other guys to kind of get
that brings us, I guess, to China.
But in that view, I think that's therefore, if the dollar does continue to appreciate, I think the likelihood is that the US rates would converge with the rest of the world, which themselves seem to be converging with Japan.